What's up, everybody? Dalton Grados here with Grados Capital, and today we're going to be talking a little bit about liquidity in the markets. First off, what is liquidity? Why does it matter? And how can we identify it in the markets? So, first off, what is liquidity? It's essentially, at the simplest level, just buy and sell orders, right? That provide the ability for orders to be filled in the market because you know, if you haven't realized, if you've just been looking at the screens and thinking this is a video game, it's not, right? Every time you buy, there has to be someone selling whatever you're buying to you, right? And conversely, whenever you sell, there has to be a buyer. And so when you are in a market and you can just buy and sell very efficiently, very fluidly, that means there is a lot of liquidity. And most importantly, when you are an institution or a hedge fund, which are obviously running algorithms to displace large amounts of orders, there becomes an issue with liquidity. Because if you need to buy, 7,000 contracts or, X amount of millions of dollars of a certain asset, obviously there's going to be a problem with filling all of those orders. And so that's where liquidity becomes a very big factor in our trading, because that is what, the big whales, the algos, the institutions are using to get into the market. They need liquidity. And so the market and price is always going to be reaching for liquidity with the high time frame, right? So, hopefully that, kind of explains some fundamentals behind liquidity. So now let's just go ahead, and we're in our NQ chart, and we are actually on a historical replay. And so what we're going to do is identify liquidity. So we're gonna, press play here. We're in our overnight session, replaying the 24th of July here, 9:15 in the morning. So just below or just before the market opens. Now, let's identify where liquidity would be. So we can do this on any time frame. That's the cool thing, is because markets are fractal, you can have liquidity on from the 1-minute chart all the way up to the daily and weekly chart. Here we are on a 15-minute chart, which is what I kind of like to use for intraday trading, and then dial it down 5-minute and 1-minute for my entries. But the 15-minute kind of gives me the overall picture while still being granular enough, right? So anyway, so imagine we are sort of in a downtrend here, right? If we are, regular retailers, if you think about the way retail thinks in terms of maybe support and resistance. So okay, retail is probably going to buy the market if we come above this level here, which was sort of acting as a resistance before, right? Even if down here, this could maybe be a resistance when we were down here. If we break above it, retail is going to buy above this level. They see it as resistance. Now they see this as resistance. They're going to buy above here. So these are what would be called relative equal highs. So it's not that they're the ultimate highs, but relative to the current range we're in right now, these are relatively equal highs. These are our relatively equal lows. And so retailers on a low time frame might be thinking, okay, I'm going to short the market if it comes below here, and I'm going to buy the market if it comes above here. That's kind of the retail logic. Well, if you're an institution and you want to go and short the market, then what would you want to do? You would want to get your algos and run the buy orders here, run the buy stops above here to get your liquidity to take your short orders, to basically have all those buy orders that are resting above there, fill your short orders and take this market down. Okay. Similarly, if we were in a high time frame, so we always want to typically trade with the high time frame, right? So let's just imagine we're in a high time frame bullish scenario. then if I wanted to put a lot of buy orders in, maybe I'd want to take out the sell stops down here below these lows. So I'd want to take the market down, get out all these people that are all excited about shorting the market, get their sell orders to fill my buy orders to then take the market up. So hopefully that makes sense. It's a little bit of contrarian thinking, but it makes sense when you think about it in terms of a large amount of orders and needing to get filled and grabbing that liquidity. So we're going to identify our buy side liquidity here, right? As around this area, right? Sell side liquidity will be below here, right? So let's go ahead and fast forward the market and see what happens. So we're getting close to market open. So if I am short bias on the higher time frame, I'm thinking what I'd like to see when I approach the market is that I want to see these buy stop orders taken out to then go short. If I'm long bias, maybe I want to see the sell side taken out. So let's just say we're short bias today because on the daily chart, I don't know if this historical data is giving me enough, but it looks like the market's kind of taking a breather here. Maybe we want to see the market come down a bit more on the daily to fill in some of these imbalances. So we'll say we're short bias. Okay. All right, let's see what we get here. I'm going to speed up the time. All right, we're taking out some of that. We're taking buy side. Now, let's pause. This is right at market open. So I typically like to wait at market open, but let's say you like to trade the open. What are we doing here? Are we automatically shorting here? No, we want to see what happens. So when I'm looking at liquidity, I see, okay, this buy side liquidity was taken out. How do you know that they're going to take buy side and take it short? Or how do you know that this is actually going to be a breakout and it keeps going long? Well, this is how I do it. So basically, let me see if I can draw this maybe just with lines. Okay. So how I know if this is going to be a liquidity grab to go short is it goes up to grab the orders and then comes back down below my buy side liquidity. Right? It comes back down sharply into range. It gets a sharp displacement down. Right? So that's what we want to see if we want to go short. We want to see a reach above and then a failure slam down. How do I know if this is just going to take off and go long? Well, then it should come above here, right? And then test down and accept above this resistance area where the buy stops orders. It should hold here and then continue up. So that's a very important distinction. I'm not just blindly thinking, oh, they're grabbing liquidity to go short. This could be a breakout. So those are the two things I'm looking for. First, I'm identifying the area that I'm looking for. I'm identifying I see there's buy side liquidity above these highs. I want to see it taken. Once it's taken, is it going to sharply fail? Then we go short. Or is it going to come back, accept, and then go long? That's the distinction. That's how I know, right? So that's an important clarification there. Let's see what happens. Okay, these are 15-minute candles, so maybe we want to drop down to a 5-minute chart. Okay, oh, I see some rejection here. Keep in mind we're right near the open. Okay, so coming back below. Okay, it's looking to me like we are going to be failing. Oh, look at that strong displacement there. That's some strong displacement. Now we've broken back through the range. Now we've also broken through these lows, right? So these lows are my confirmation that we're getting a market structure shift to go short. So then I would want to down time frame, maybe even on the 1 minute, to see maybe we can come back and test this range and short there. So you see how we did that? So step one, we took liquidity. We waited to see if it was going to come back into range or if it was going to hold and bounce to determine if it was going to accept or not. We got this rejection. We came below these lows. That's called a market structure shift, where we come back below the lows of the range. Now we want to see it come back up a little bit into this gap and then short our way down. And I might bring the time down. So we have the 4x. So I might put limit order to short.
Order submitted.
Ideally, I'd like to see it come back up here, but maybe we don't get that. Let's see if it comes back. Maybe we short again at the bottom of the range. That's another, so a more conservative entry would be back up here, but then again, you might not get that. Maybe it's going to now test this bottom of the range area as a resistance area, right? And this is all just hypothetical. Obviously, this is not a real trade. This is market replay. So, but I'm, showing you the concepts, right? So there's kind of two different ways you can play this, right? You might not get it coming back all the way up here, but then you have this area to now be sort of your resistance, since we got an energetic displacement below it. And we might have missed this trade. Oh, but look at it go, right? So that's an example of a liquidity grab. Again, we might have, if this happened that fast, we might have missed that trade. But you could see the example of, the liquidity grab to go back down. Now, what would I do here? Now this has reached our sell side liquidity. So if I did grab this short, if I happen to be quick enough to grab this short, I'd probably be targeting this is now our sell side liquidity. That's probably the area I would have a first profit target, and then monitor to see, if it's going to go lower. Maybe if we zoom out, if there's any. Okay, so we'll consider that the bottom of our range. So now I'm curious to see if we accept it below here, because this is a sell side liquidity. It's either going to go lower, or maybe they're going to grab the buy side liquidity and the sell side liquidity and bring us back just into range and just chop. But they grabbed everyone's buy and sell side out. That's one scenario. Another scenario is we displace again below this liquidity and then come back and accept. So we either again, just like we did on the top, get my line here. Just like we did on the top, we either grab our orders and come back into range, or we accept and continue down. That's again what we're looking for, just like we did on the top. So again, the point of this video is we're just identifying the areas that the algos are going to grab liquidity, and then we're using that to determine our trade plan, right? Okay, and let me actually go back to the 5 minute. Okay. All right, I'd like to see it now, see if we're going to come up and accept that area, or if we're going to get a strong displacement back through it. do 10x speed. So again, this is on market replay 10 times the speed. So in actuality, you see how you're being very patient in your trading. All right, I want to see, do we reject or do we come back into this area? It looks like we could be rejecting, but let's see. I mean, we haven't. All right, are we going to reject? So if we reject, I'd like to see it, break these lows. If we reject here, I'd like to see it break below the lows again. Kind of choppy. Is it going to break? Broke the low. Okay. So maybe I could be looking for shorts. But again, if it comes back up into this area, then it's going to bring us back into range. Ooh. Back up into range. All right. So it looks like they're taking buy side. Now they took sell side and brought us back into range. Again, this is the 1 minute chart. If we look on the 5 minute, we can see that. All right. So let's hit play again. All right. All right, maybe I slow this down so I can actually maybe get in the market here. All right, I would not take a trade in here. This is kind of the middle of our range, right? So I'd want to be kind of at the extremes. But you get the illustration, right, of the liquidity areas being taken. All right. So if I were in here, there hasn't been really, I probably honestly would have missed that short this long. If you wanted to be aggressive, you could have got in down here once it broke back into range. But now it's just kind of chopping around. Now we're reaching the top of range again. So maybe if we're going to respect the range, maybe I could take a short up in here because we already took this buy side liquidity out. We're filling this imbalance here on this candle. Maybe I go ahead and take my short, in here. If I wanted to now just short the range, let's see what happens. And I think I've illustrated the concept of liquidity, but let's just actually take a trade.
Order filled.
All right, I probably put it above this high. Speed it up, see what happens. All right, coming back down into range. All right, that's good. Maybe bring the stop to break even. It's kind of at a support area here. Maybe I lock in a little bit of profit and see if it breaks through.
Stop filled.
All right, so I would have seen maybe if it was going to break through, break back down through this area. But of course, being conservative with my stop. Actually, look, we just filled a imbalance there. Why don't we get short again?
Order filled.
Because we filled that imbalance. See that? Let's see if it breaks through that low. There we go. Let's see if it continues down. Maybe I target the bottom of the range there.
Order submitted.
We got our free trade.
Order canceled.
So you can see how I might have executed that there. Again, you know, being pretty tight with my stops in that example, but you see the example of the liquidity grab. So hopefully this was helpful. Let's see, we're running a little over 20 minutes now, so I'll stop it there. If you have questions, comments, let me know in the comments below. Don't forget to like, subscribe to the channel. Also, subscribe to my daily pre-market newsletter if you want to get my daily pre-market insights sent directly to you in your email inbox. It's totally free. Also, you can check out Apex Trader Funding. Also linked, both of those things are in the link below. So I appreciate your support, and I'll see you guys next time.